Hey, you've had quite a career here. So, you're CEO, co-founder of Title Ease, and
Yeah.
chairman and CEO of Lincoln Abstract and Settlement Services as well.
Yes.
Uh, wow. So here you go. You got 35 years at the intersection of Wall Street, mortgage banking, and real estate services, right?
Yep.
So, and that's from Goldman, excuse me, to Merrill and launching the first ever franchise system. Now, that's a serious evolution of your career. Yeah. So you've done it all here. You've scaled companies, sold companies, and now you're reinventing how title agencies are built.
I couldn't have said it better myself, Bill. Well done. Well done.
Okay. Yeah, yeah. Well, when you look back, were you always building towards entrepreneurship, or did that come later on?
So, it's interesting. The way I would describe it is that I was always interested in knowing how things work. So, when I was trading loans at Goldman Sachs, it
Mhm.
it it became pretty obvious to me early on that if you understood how those loans were being serviced
Mhm.
and could fine tune the servicing to make it the best that it can be, your loan portfolios would likely perform better. And so I spent a lot of time, more than I think most traders, I spent a lot of time visiting my servicers and trying to understand who was the better servicer out there and why.
Yeah.
Um, in trading loans, I also thought, and I think most traders got this, but I also felt like people who had a better origination system, a
Mhm.
more diligent kind of loan manufacturing process, that their loans would perform better. And so I was always very interested in understanding their operations. And so
Yes.
even as a trader, I would spend a lot of time with operations to understand how it worked and how that would make, my portfolios better. And so I think what just naturally kind of evolved is once I felt like, okay, I really don't feel like trading loans anymore. Because I had kind of learned so much learning from, all of these people that made loans and service loans. I
Mhm.
had a little bit more operational knowledge than I originally expected. Um,
Mhm.
and yeah, I always felt like, leadership and understanding how to put the pieces together on a team was super important. And so putting those two together kind of became a just a natural next step.
Right, right. Here we go. So that's 13 years at Goldman Sachs and Merrill Lynch, managing residential loan businesses, and doing the trading strategies. But that has evolved. Now, what did Wall Street teach you about risk that Main Street doesn't understand?
Yeah,
What's your take
great
on
point.
that?
Great point. I think the biggest thing that I came away with is it's not just the risks that right? And you're
Mhm.
hedging for and preparing for. There's an awful lot of risks out there that you may not know, right? And
Mhm.
really trying to understand that, what are those, big unique events that are out there that can affect you? And, at the end of the day, that includes a whole bunch of things. Like during the course of my career, we lived through the dot-com bubble, right? We
Sure.
lived through the Russian ruble crisis. We lived through the long-term management, wind down and liquidity issues. And then, of course, the great financial crisis in '08. And so, it's the things that bite you are not necessarily the things that you're regularly hedging for, right? Like you're
Mhm.
regularly hedging for credit risk, you're regularly hedging for interest rate risk, and you don't
Mhm.
necessarily have on your radar that things that are going on, with the Russian ruble over halfway around the world can actually impact you. But when liquidity dries up, it dries up for almost everybody.
Mm, mm. So, how did managing the residential credit at scale shape your leadership approach later on?
Really good question.
Yeah,
So,
yeah. How did, as a
yeah,
leader here? Yeah.
yeah. So one thing that I think became pretty evident to me pretty quickly is how much I didn't know. When I moved onto, the trading desk at Wall Street, I worked for a couple of really good senior guys, Bob Christie, John Sobel, Stephen Mnuchin, former Treasury Secretary. And, when you're around those types of really smart people, you realize really quickly that you think you know a lot, but you don't really know a lot. So,
Mm,
I think the first thing that it taught me was that, the value of, people with different skill sets, people at different points in their career, have learned kind of different things. I also learned though that, trading is kind of pretty specialized. Um,
mm,
and so one of the things that I learned was just like, hey, the guy that may have learned, how to trade mortgage loans versus say the guy that learns how to write, casualty insurance policies. Um, if they tried to do the other thing, they wouldn't necessarily know the things they need to know to be competent at it. And so one of the things that it taught me early on was that there are a lot of smart people, but we're all trained in different things, right? And
mhm.
so, like if you were to tell me today, what are all the things that you need to do to actually put together a podcast? I wouldn't know how to do that, right? Could I set up a camera and a light and start talking into a microphone? Sure. But would I really know how to run a podcast? No idea. Um, but not
Mhm.
because I'm an idiot, just because I haven't done it. I haven't learned it. I haven't been trained in it, and vice versa. So, I think some of the things that I learned was, you know, getting enough smart people on a team in a room, training them the right way, and giving them the opportunity to kind of grow into stuff. Those things are super important, but also, having the right skill sets that can mesh together to give you a
Mm,
complete kind of team. I'm never going to be the guy that can do every function in my company. I am a CPA, but it's been quite a number of years. And so I have to have a competent CFO, right?
mhm.
I'm not the lifelong expert in title, so I need title experts. And so I think the biggest thing about, what I learned in leadership is how small you feel when you're really trying to learn and pick things up. And um, therefore, you need to continue to learn, but also have the right people around you in different parts of the team.
Mhm. Would you say that the foundation of value creation is the risk management? Is that worthy to say that? What's your take on that?
So I think that's a fair statement. Um, but the way I think about risk management is everything we do has to be about risk management, right? Like even just
Mhm.
crossing the street, right? You need to have appropriate risk management. Otherwise, you're going to get hit by a lot of cars, right? And
Sure.
so I do think that that is fundamental to running any business. Um,
Mhm.
I,
Mhm.
I really do.
Mhm. Okay, so let's go to Clayton Holdings here. So you grew that revenue from 160 million and then led the 305 million sale to the Radiant Group. What separates a business that survives from a business that is built to sell.
So when you say a business that is built to survive, um,
Yeah, that survives from one that's built to sell it. I
yeah.
mean, yeah, yeah.
So look, I think at the end of the day, what it really comes down to, and I talk about this a lot with, even just employees at the company, is fundamentally, you have to provide good service to your customers, right? And
Mm,
whether you're looking to sell the business down the road or whether you're looking to just continue to run the business, maybe someday hand it down to your children, whatever the case may be, I think what you really need to, at a basic level, is you need to provide good service. Now, none of us are perfect, right?
hmm
So, the last time, somebody was perfect or walked on water was a couple of thousand years ago. And so
hmm
we know we're going to make mistakes, but I think the hard work, the perseverance around fixing those mistakes, acknowledging those mistakes, making sure that your customers don't suffer from those mistakes, and
hmm
that you quickly fix them. I think regardless of whether you're building a business to continue to grow, and manage it, for many, many years, or to sell a business, first and foremost, you have to have a good product and a good service that your clients can rely on, right? From
Yeah.
there, then honestly, I've never done anything differently in my business. And I've heard plenty of stories about people who, try to goose revenue or introduce some short-term hits that, you know, get a company kind of juiced up and ready for sale. My
Yeah.
view has always been that if you build a good core business that your customers and your clients, rely on and use faithfully, with recurring revenue because of that loyalty, um, then you're going to be able to sell that, or continue to manage and run it. So I don't necessarily, now there'll be plenty of people that disagree with me. I guarantee. Um,
Mm-hmm.
but my perspective is building a good company, and a good product and a good service is going to bode well, whether you want to continue to run the company and run it for a long time or sell the company, build the best product you can.
Hey, what's your take on the importance of culture versus company culture versus the systems that you operate under? Which is more important? Yeah, could you break that down for us? Culture versus systems?
Absolutely. So what I will tell you is I think they're both really, really important.
Mm,
And I tend to be kind of tech forward in any business that I've ever run. Um, Even when I've been running smaller businesses within much bigger companies. But I think absolutely foremost, while they're both important, and I'll get into the tech, the company culture is the single most important thing for any number of reasons. And,
mm.
number one, as I was talking about earlier, I'm sorry, did you want to say something?
And no, yeah, delve
Okay.
right into that.
Yeah.
The culture is the most important for you.
I think
Let's hear it from you. Yeah.
Yeah, I think it's the most important thing for a number of reasons. Number one, if you have a good culture, um, and people buy into what you're doing, it becomes a good place to work. If you're in a good place to work, you enjoy the company, that's going to come across to your customers and your clients. And that's super important. On top of that, inevitably, there are going to be times, like I said, where people make mistakes.
hmm
But if you've got a good culture, you know, people roll up their sleeves to fix those mistakes, right?
hmm
People
hmm
aren't, backbiting, attacking each other. It's a team. Try playing a baseball game with, only seven people in the field. It's difficult, right?
Mhm.
But if everybody's pulling in the same direction, you can achieve a ton more. That camaraderie, I think, is important. And like I said, it comes through to your clients. If there are no clients, there are no employees, right? There's no salaries. And so it's really important, to have that culture of good people doing good things. Now, I
Mhm.
also believe, you know, right behind that is you hire the best people you can, right? And the people are always your number one asset in the company. But then what you need to do is provide them the tools so that they can be the best that they can be on behalf of the company and your clients and customers. And so I do think that giving them all the tech available to be the best they can be is super important. And, there's a lot of tech that can replace, a lot of kind of what people do. You were talking about my background earlier. Traditionally, we usually get a lot of snow every year in Utah. And,
Mm.
you know, I can clear my house by hand with a shovel when the snow comes, right?
Yeah,
But I could do that job a lot better with my skid steer and my Kubota tractor, right? I can make
sure.
light work of it. So, same thing with a company. I think what you really need to do is have the best people possible, but then give them the tools that allow them to do the job as well as they can. And that I think, flows through all the way to the end product that your customers and clients receive. So, so I think
Mm.
they're both
Mhm.
super important. Um,
Mhm.
but if you've got a bad culture, nothing else matters because the company's not going to do well. The clients are not going to stick around,
Mm.
you know,
Mhm.
gets toxic, and who wants to be in a toxic environment?
Right, right. Okay, very good. Very good. So let's move on here to the birth of Title Ease. This is really exciting stuff. So at Title Ease, you launched the first ever RESPA compliant title franchise system. And why did the industry need this?
Yeah. So great
Mm.
question. So historically, most lenders, most real estate brokerages, most property investors, they spend a lot of money on title for real estate transactions, right? Um,
Yes.
and most of those types of profiles, right? Lenders, brokerages, property investors, they're driving the transactions. They're acquiring the customers. They spend a lot of time, money, energy, attracting clients, trying to keep those clients for life. And while they're driving and doing those transactions, there's this process that, is outside of their kind of core process, right? Just taking a
Mm.
in their lending process. And so their customer has to go out and interact with another company, a title company that's outside of, that existing process. And so what we've seen historically is a lot of joint ventures. Some of them are compliant, many are
Mm.
not compliant. Um, and those joint ventures are clumsy to manage, right? And on top of that,
Mm.
those joint ventures didn't provide the joint venture partners a lot of real enterprise value in that, title JV. And so I've been a part of JVs on both sides of the equation as the
Mm.
non-title company as well as the title company. Um, and even with, the best of title companies, they're just a little bit clunky to manage. And like I said, some compliant, some not. So when me and a number of my industry buddies had invested in a small title company up in New England, Lincoln Abstract and Settlement Services, one of the things that we really liked was this concept that they had of creating a franchise structure for replacing of JVs to make them easier to manage, to make sure
Okay.
they were fully RESPA compliant, um, and still be able to, share revenues with a lender, a real estate broker, a property investor, et cetera. And so that's really why we built the franchise model was, we felt like not every JV was compliant. In our industry, there's an awful lot of money that goes under the table. Some of it is in the form of cash, some of it is in the form of, taking people to the World Series or golf in Scotland or,
Mm,
sorts of things, paying for marketing and advertising. What we do is we get, each of our franchisees, we work with them and our outside licensing attorneys to get them fully licensed with their own title agency. Make sure they have licensed people doing real requisite work to comply with RESPA.
mhm, mhm,
We're 100% transparent. We are listed,
mhm,
both us and our franchisee are listed on the HUD or the CB. And, we each do requisite work on our side. And so we made it so that they don't have to hire lots of people. They definitely have to have people doing real work. Um, and they can get up and running in the space a lot more quickly than if they tried to build their own title agency. And so, at
mhm,
the end of the day, those were some of the things that we were trying to solve. So what our solution provides is a, compliant way to earn a title revenue stream, uh,
mhm,
create enterprise value. Our franchisees own their own title agency, 100% ownership. We don't own any of it. Um,
mhm,
and they also, as a result, get to better control their customers' experience because they handle all of those client-facing communications, scheduling, you know,
mm,
issues that come up with title. And so really, that's what we were trying to solve for, is finding a
mm.
better way to do all those things.
Right, right. And so what problems does Title E solve for mortgage lenders, say? Um, yeah.
Yeah, I mean, it's really the same thing, right? A lot of times what'll happen is, and this is not just title companies,
Mm,
but you're a mortgage lender, you set up your process, and there's an awful lot of mortgage operations that have created some really good, really smooth operations using a mix of really good people and technology. And so they create this entire process from start to finish. But in the middle of that process, there are kind of two main times, and we could argue three, but two main
mhm,
times when their process is not really their process at all, and they are not in control of it. And that's when
mm,
it goes out for an appraisal, right? That's in the hands
mhm,
of somebody else in another company, um, for important reasons. And when it goes out for title, and sticking to title, there will be times in that process where a cloud in the title comes up. Maybe there's a lien that needs to be cleared, a mechanic's lien.
yeah.
Um, and it may take the title company a little bit of time to get in contact with the appropriate people to clear that lien. And the lender is oftentimes in the dark. Where do we stand on that? Right?
Mm-hmm.
have their own title agency working with us, right? They have 100% transparency into where we are in the process. They share our technology and our systems, so they see all of our notes. They see everything occurring in the file. So when a client calls up and says, "Hey, what's going on with my loan?" The lender doesn't have to say, um, "I'm not sure. It's with title. Let me call the title company and I'll get back to you," right? So they
Mm-hmm.
go on
Mm-hmm.
the phone with their customer, they have to call the title company. Maybe they reach somebody at the title company, maybe they don't. Maybe it takes the title company a little bit of time to get back to them, but that creates a little bit of a delay and some uncertainty in their transaction and with their customer. So this helps smooth those gaps, makes it more efficient. And because they are also the title agency, it allows them to provide better customer service for their borrowers.
Right, right. Very good, very good. Um, so diversification in a high rate environment here. You've spoken about lenders diversifying into ancillary services during high rate environments here. Um, why is title such a strategic vertical on this?
Well, there's a couple of things, right? In 2021, the rough size of the mortgage market was about $4.5 trillion in mortgage transactions.
Mhm.
In 2023, it bottomed out at about 1.5 to 1.7 trillion, right? So it lost about 65, 67% of,
Mhm.
you know, transactions. Um, Title gives people that additional revenue stream that as the overall number of transactions in the marketplace goes down and people are fighting harder for fewer transactions,
Mm.
the ones that they win or the refinances, where they can do title, that just allows them additional revenue streams for the transaction that they do win, right? So even though
Mhm.
there may be fewer transactions, they can have
Mhm.
more revenue per transaction when they can also participate in the title. And let's
Mhm.
face it, as margins have been compressed, having that additional revenue per transaction is really valuable. In some
Mhm.
cases, depending on who the lender is, um, it makes the difference between being profitable
Mhm.
or not being profitable. So,
Mm. What mistakes, in your view, do lenders make when trying to expand into ancillary businesses? Is there a commonality there?
um, you know, it's a good question. I think I wouldn't necessarily just say lenders. I think, in general, when people add on services, you know, I think you should strive for everything to be best in class,
Mhm.
as smooth an operation as possible. One of the things that means is number one, you have to get buy-in from your people. But maybe more importantly, you need to be able to measure, what you're doing and how you're doing it. In some models, there's just not a lot of adoption. Um, and I think being able to measure the efficiency of those ancillary services, um, the effectiveness of those ancillary services, how that
Mhm.
compares to, a third party, availability in the market. If you can't perform better than that third party availability of the service, then it's not necessarily as much of a lift for your
Mhm.
operation. And so, I think, having the expertise, building it the right way, being able to measure quickly what works, what doesn't work.
Mhm.
All of those things are really important if you're going to be successful at adding ancillary revenues, and services. Um, and so having somebody that's done it and understands how to do it smoothly, so that
Mhm.
it's accretive to your existing operation is critical, right? If
Mhm.
it's not
Mhm.
accretive, then you shouldn't do it. If it disrupts your current operation because it doesn't function effectively, then you shouldn't do it. And so those are the things that we're always most focused on.
Mhm. Mhm. Yeah. So franchising, it's really common in the restaurant business and other types of businesses. Um, but it's rare in title. And what makes title franchising viable now?
Yeah. Well, you know, I've spoken to a couple of the big underwriters, um, early on, and some of those folks had said to me, "Hey, we really always thought that this business should be a franchise business." So,
Mm.
I think as the world has gotten more complex, the franchising model helps simplify being able to get into that business. And so it's not a haphazard tack on to your business. It's a,
Mm.
legitimate business that
Mhm.
allows you to add that business in a much more efficient way. Um, and one in which your franchisee is participating and building a real business. We just help them every step of the way. And so I, I think it's just a much more efficient way, to get into the business, to stay into the business without having to build a tremendous operation. You do have to build a little bit of an operation, but
Mm.
we help with all of that. And so that franchise structure, I think, really
Mhm.
makes that easier to do.
So is this the future of vertical integration in real estate?
I don't know if I'd be arrogant enough to say that.
Okay.
I definitely do think, though, it's something that everybody should consider.
Mhm.
We have
Mhm.
some, materials that we share with, potential franchise partners, that walks through, an example that we got from, a franchisee when they were planning and building out their own title company. um, and then they found us and decided to go with a franchise instead. And when you look at the time that it would have taken them to build their own, when you
Mhm.
look at the cost that it would take in them to build their own, um, it's really a no-brainer because we either do or help with a lot of the steps in there. And so
Mm.
I do think that as long as you're dealing with, number one, good, decent, and honest people, and number two, a good operation, I do think that it makes a lot more sense than going out and buying or building one of
Mm.
these types of companies on your own.
Okay. Mm. There we go. So as far as monetization strategy, you've managed and you have sold multiple businesses in your career. Right now, what are buyers really looking for today?
Um, when you say buyers,
Uh,
yeah,
yeah.
yeah.
Are they looking for a tech infrastructure? Are they looking for leadership continuity? I
Yeah.
mean, are they looking for the basics, the EBIT, DA predictability?
Yeah.
What are they looking for today?
Yeah. So, um, number one, I will say that, the last company I sold, you're right, I have sold a few. Um, the last company I sold was a couple of years ago.
Mhm.
We had a appraisal management company. We sold that. Um, but everything that you just mentioned, I think it kind of depends on who the buyer is, and what their philosophy is. The thing that I would tell you is, I really feel like there are some folks that look at businesses differently. And so I can tell you what I'm looking for. I don't know what any other buyer would be looking for, but
Mhm.
when I buy a business and even when I sell a business, there's a couple of things that I think are critical. Some people look to buy a business and replace a management team, and maybe they replace the management team because they don't have confidence in it. But I think the management team and the quality of that management team, both from a technical business perspective and the business that they're running, as well as from, the quality of the human being, the
Mm.
honesty, the integrity. I think that's paramount. The same way I thought earlier that culture was the
Mm.
most important thing in companies, followed closely, by some of the other stuff. I do think that a lot of the success or failure of any acquisition is going to depend upon how good the management team is that's executing the strategy. And so that's one of the biggest areas that I would look at and that I think buyers should be, focused on is that the right management team, both professionally and personally? Can you
Mhm.
trust
Mhm.
them? And are they good at what they do? Uh,
Mm.
of course, the profitability and EBITDA are important, but there are some folks that are buying companies to, roll them up, um, turn them around. So it's possible that in certain acquisitions and acquisition models, you're not necessarily looking at, EBITDA as the most important thing, especially if you think the company was either mismanaged or is just coming out of a bad, market or those sorts of
Mm.
things. But, to the extent that the existing management team and company have good EBITDA, then, that's always, I think, good, and it's certainly important. You'd rather have a cash flowing, positive P&L type of business than not. But again, it
Mm.
just depends on kind of the types of
Mhm.
companies that you're looking at and,
Mm.
what your strategy is. There are certainly some buyers
Mm.
that, you know, wouldn't even look at a company if it didn't have more than, say, $5 million of EBITDA, either because
Mm.
that's too small, that's not profitable enough, and whatnot. But there are other strategies that,
Mm.
may be different. And so,
Mhm.
but the other thing that I would say, because I think you touched on technology, I
Yes.
think in this day and age, right, in February of 2026, I think if you're not employing technology to make your people, your process better and more efficient, then you're missing the boat, right?
Mhm.
There is so much really good technology, and more is being developed every day. And one of the things that I think is critical for anybody leading a business is you need to stay abreast of all of those developments that can help your business become better, more efficient, more productive, better for your clients and your customers. And so,
Mhm.
I do think, that any buyer, if you're looking at two companies that are identical, except one uses a better deployment of technology in their tech stack versus somebody that utilizes less and not as efficient technology. I think you're going to opt for the one that has the better use of technology every time.
Hmm.
And so what we personally try to do is just make sure that, when we can avail ourselves of technology that makes us better, more productive, more efficient, reduces mistakes, allows us to, earn more, increase productivity and revenue. We look at that every time. Sometimes, the right move is to not implement at a certain, time and implement down the road. But yeah, I think it's really important to stay up to date on technology and how you deploy it.
Okay. So looking ahead here, looking ahead 3 to 5 years down the road, what's going to happen, in your opinion, to mortgage origination, title services, and the settlement business over the next 3 to 5 years
Yeah.
in certain areas too?
Yeah.
Yeah.
Well, I definitely think the business is going to change. I think the development, we're in the real early stages of things like AI. I think that AI is going to be a game changer for a lot of different,
Mm,
operational businesses. Um, I think as I've been talking about, I think it's going to help make people, better, more efficient. I don't think that in certain businesses like, mortgage lending, that it's going to do away with the loan officer. I think that there's still, we're in the industry, right? So we take for granted, some of the knowledge that we have, but there's an awful lot of people in the world that don't know anything about mortgages and need help and guidance, need that,
mm,
loan officer
mhm,
who's also a counselor, and helps people get through and understand the mortgage process. And so I do think that the AI tools, though, will help, mortgage lenders and really good, mortgage professionals be better and more efficient at the production of the loan, the processing of the loan. Um, I think that's a game changer for the industry, and we're just going to see that get better and bigger. I also think,
mhm,
for capital markets, secondary markets, things like title as well.
mhm,
I think the technology behind blockchain, I think that those decentralized ledgers, I think that is also down the road going to be a game changer for the entire industry. Um,
mm,
again, I think we're early on, and I want to make sure to separate, cryptocurrency from blockchain, right? Blockchain being the technology behind some of the
mm,
crypto, but they're obviously different and can be used for different things. And so I do believe that blockchain and having those immutable
mhm,
records on chain, um, I think sometime down the road, whether that's 3 to 5 years, or longer, I can't really predict that. But I do think that at some point that is going to be a game changer for
mhm,
real estate. And I think there are some really smart companies, investing a lot of dollars, in exploring that. And at some point, we'll see the fruits of that. And so,
mhm,
yeah, 3 to 5 years from now, I would expect as a result of, technology, and all of that technology fitting into the regulatory framework that we're used to in consumer-facing businesses like lending. Um,
mhm,
I think that's going to give, people in the space who survive, because I don't think everybody will. Um, I think it's going to give them the ability to produce more with a smaller footprint and doing it more efficiently. So, broadly
Mm.
speaking, I would say that, you and I could spend hours getting into some of the details and the nitty-gritty of that, but I'm a very big believer in that.
All right. As we start to wrap things up here, if you were advising a mid-sized lender today, what would you tell them to do?
It's a
Yeah.
really tough environment. It's a really tough environment. And honestly, I think I know enough being in and around the industry for a long time. Um, but I wouldn't be arrogant enough to give them advice. I do sit on the board of a lender. We talk about
Yeah.
a lot of things. Um, and so, with all that said, what I'll say is I think you definitely have to pay attention to some of these trends. Um, the technology and what your tech stack looks like is important. But I also know enough to know that if you're a lender, it's really hard because over the years you've been, putting in a bunch of technology, which, we thought was going to be enough to completely change the game. And I
Hmm.
want to say that the average kind of lender and or real estate brokerage probably has somewhere between like 10 and 16 different parts of their tech stack and different solutions. There's
Hmm.
a lot of solutions that were brought to the market that were point solutions, and didn't necessarily think about the entire production process holistically. Um,
Mm.
and so I think, that's one of the things that people have to be really smart about, how they go about kind of unwinding that and building, creating, or adding, some technology that's more holistic. At the end of
Hmm.
the day, you know, customers and the consumer are still the most important thing. And if we focus on making this, cumbersome, kind of opaque to a consumer um, process easier and more understandable for consumers and make it a good experience, that's
Hmm.
almost always going to win out. And so I would say, definitely be focused on that tech stack and the solutions that are out there that can kind of clear that up and make that most efficient. But at the end of the day, none of that really matters if the consumer is not happy. And if the consumer thinks it's a terrible experience, right? So um,
Mm.
those are probably the two biggest things that I would say. We have a million things in the industry, though, that we can point to and think about,
Mm.
to try and make ourselves better.
Joe, thank you. This has been incredible. You're such an enlightening voice in an area that most people aren't too well aware of here, and you have revolutionized a new way of doing business in the field of title. So, thank you so much for sharing with everyone your expertise. And boy, yeah, 3 or 4 hours would maybe it would touch the surface here of your knowledge and your inspiration and leadership that you've given over the years. And I just want to thank you so much for taking the time today to speak on the podcast. It's been really good. Thank you.
Well, Bill, thank you so much for those nice words. That's way too kind. I appreciate it. It was really nice being able to chat with you. Thank you.
You're welcome. Yeah.